G'day expats and welcome to another episode of Expat Chat, episode 99 today. Gosh, we're close to that 100 mark. Can't wait till we get there. As always, joined with my co-host, the Managing Director of the Europe, Middle East and Africa's region, Brett Evans. G'day, Brett. How you going?
Well, thanks, mate. Well, thanks. First of all, I'd like to apologise to the audience out there for poor quality sound. I'm actually in Abu Dhabi this morning, down here seeing clients. We've got our big seminar tonight in Abu Dhabi. A lot of folks coming along to that. Had a sellout our house last night in Dubai, and pretty much rolling through our tax and finance briefing for Aussies in the region, and very well received. Tax residency, end of service benefits, a lot of stuff that relates just to people in the sandpit. So a very busy time here, and for the folks on the call, joined by my mate and colleague James Ridley, who's the Managing Director of the Australian office and looks after the Asia and Americas region. And I think chatting to a lot of folks last night in Dubai, the podcast was the topic, which is fantastic. So g'day to everyone who came up to me last night in Dubai and thanked us for the podcast. Everyone joked on the night. They'd always joke saying, "I just think my parents are watching." They're like, no, we're watching as well, so we'll listen. So it's nice to know that there's actually some people behind the earbuds listening to us.
Yeah. I know. I've had a few calls of late the last couple of weeks, and a few people have mentioned and sort of dropped the podcast and they listen and they've taken some good things away from it. So really appreciate the feedback we're getting there. If you're listening today, please do pass it on to your fellow expats in the area, Australians obviously, and give us a like or rating. That all helps so we can get a bit noisier as we go on towards that advocacy for Aussies abroad. Mate, today's topic, a really good topic, and I guess it's about almost the game of Monopoly, but applying it to real life, which is pretty funny. And I'll let you do a bit of a disclaimer first, and then I'll read, I guess, the tagline for today's episode.
Exactly, mate. So all the information that we're going to espouse today should be treated as informational and educational purposes only. Do not construe this information as personal advice, and if you do need to get personal advice, chat to Atlas.
Absolutely, mate. Let's jump into it. So, talking about the game of Monopoly and how to apply it to Australian expats, this was a funny sort of meme that went around the traps recently, and it read like this: imagine playing Monopoly and never buying any assets or investments that generate income. Imagine you just went around collecting $200, giving your money to the rich and trying to stay out of the jail. That is actually how most people live their life. And I think when you saw this, Brett, you said it really resonated with you in terms of how a lot of Australian expats and expats in general can live their lives when they're hopping around the world. And I think we wanted to really tag it back to the fact that, well, what should you be doing as an Australian expat abroad? What are things that you should be thinking about as life goes on?
Look, I think everyone can be forgiven when you become an expat. The first year is crazy. You're settling in, you're trying to get kids at school, you're trying to make friendships, you're trying to get to learn the new people at work, how to drive around, how to do all the basic 9 to 5s. And after that first year, you find yourself in a rhythm that is very hard to break. Your lifestyle adjusts for your new job, your new career, your new cash flow status. And we always talk about with clients, the best time to start, if you want true effective results from your time away, is start on day one. Now, I know it's very hard to do that. Some people do. We had a couple last night at Dubai who did that, and I was really impressed by that. But most people at the 6-month mark, 12-month mark, the dust has settled. It's now time to adult. It's time to analyze how you can make improvements, how you can really get blood from that stone. Because the biggest thing we always talk about with clients is when it comes time to return to Australia, you want to have something to show for your time away, not just a good LinkedIn profile or good photos or good stories. You and I, we're not parents to our clients. We're not going to tell them not to travel. In actual fact, I encourage my clients to travel because clients who travel are happy, and I like happy clients, and I'm sure you're the same as well too. To me, it's more about measured responses. It's amazing how much money people spend in their consolidated revenue that's not accountable. And when you start something on, the best way to do it is keep the gradient low, keep the friction low, make it easier. Don't try and
That's
save
right.
5,000 Australian dollars a month. Start with 500, and then next month do 600, and just sort of dial it up as you go, because you don't miss it. You don't realize you'd never had it in the first place because it was just getting frittered off somewhere else. Whereas if you do it in a measured sort of way over a long term, as we espouse time and time again, time and dollar cost averaging and compounding is what makes people money.
Absolutely. And it's, I guess, taking that further, it's just about automating it as well. Make your life easier by setting those, whether it's a direct debit or automating a contribution to a certain thing, or a debt repayment, or sending some money back, the same time every month, dollar cost averaging, fleshing out that currency risk as well. I think often I'll come across some expats which, they've been living the high life, tripping around for, 10 plus years, and sometimes all they've got to show for it is a bit of savings. Maybe they've saved up, $100,000, $200,000, but given their level of income over the last 10 years, that doesn't really stack up. So they've obviously been living a very good life. And if they're coming back to Australia, well, they're not actually better off than, the colleagues that they left behind in Australia, who are now maybe have got that first main residence, investment property, doing really well career-wise. And I guess when you look at savings, especially going back probably to the early 90s, inflation since the early 90s, especially in the US, it's gone up by 64%. Obviously, your savings rate hasn't gone up by that much. And then when you look at, real wealth accumulation since that same period, when you look at earnings on shares, especially the S&P 500 index, that's been 169%. And then dividends, it's been almost double that as well in terms of the growth. Whereas inflation has been a lot less than that, but interest rates haven't either. So I guess it just means trying to automate certain things so you are accruing wealth. You're not living, I guess above your means, and what's coming in is going out straight away. When you see some cash flow, some expats where they might be earning anywhere between 15 to 60,000 per month, but their expenses are, 50,000 a month.
Yeah.
You're like, what's going on here?
Yeah.
Is there things that you can carve out that isn't necessary? And what are you actually doing to build real wealth over the next 15, 20 years while you're on that kind of surplus? Because that's a once in a lifetime opportunity, that kind of cash flow.
Look, it really is. And I think you and I have said it before, and we'll say it again. Your colleagues back home are getting 11% of their salary forced into their super account, whether they like it or not, every year. So
Yep.
if you're not matching or exceeding that, you're actually at a financial disadvantage to being overseas.
Mm-hmm.
So and then because the dollar's fallen, we got down into the 62s, I think it was yesterday, which is nice. Not good for you guys, good for us.
No, it's back up now though, so I'll say that.
Great sigh of relief. From our point of view, if the dollar's fallen 20%, you don't have to do 11% of your salary. You can get away with 7s to 8s and still have the same effectiveness of an 11% contribution. So just be a bit smart about it. I just think, to me, having that accountability piece, that wake up piece. I mean, we do meet a lot of folks who, I had one couple came to me, what about 2 weeks ago, 55, had an amazing life. I mean, I'm talking the life that most people go, that's the stuff of Hollywood, but they didn't have 2 cents to rub together.
Yeah.
And
yeah.
they were
And I guess, yeah. Yeah. And I mean, when you look at building your own wealth and I guess future financial independence, it takes time.
Yeah.
It's not something that happens overnight. It's, 1 year is a brick, and then, you're just building those bricks year after year. It takes time. It's not something that happens within a 1 year, 2 year, 3 year. Hell, if you're investing in the share market for 1, 2, or 3 years, you're doing it wrong. And, let's look at the last 3 years. Most share markets have been pretty volatile. You would have been pretty lucky to actually make a real after-tax return over the last 2 or 3 years.
Yeah.
That's given that share markets have somewhat sidestepped. We've actually had a pretty awful period the last 3 or 4 years with share market returns as a whole, especially the ASX. But when you look at real wealth, it's done over time. I really think a true measure of wealth is how long you've been doing it for. If you're doing it for 10, 15, 20 years, those bricks will stack up, which will provide that independence for retirement in the future.
And given good time, it almost makes you bulletproof to volatility because you've built such a
Yep.
large base. You're not so sensitive. When you put your first dollar in, you're launching that dollar, like a hawk, and please go up, please go
Yeah.
up. Over 15 years, when you're putting your dollar in, but you've already got 500,000 individual dollars there doing its thing, you're not too worried about it. It takes
No.
away the emotion from it. And, that's what we always said, and you said before, being disciplined with this is important. Being a robot, dollar cost averaging, don't second guess the market. Just do. Because sometimes you're not going to get the best price, but other times you're going to get an amazing price that you wouldn't have got because you would have thought it's going to go lower, but it didn't. And it goes back up again. And you think, oh, wow, I got that just because I was
Well,
disciplined in doing it.
exactly right. Share markets can turn on a dime. You look at this year. I mean, a couple months ago, this year was looking great. Now it's pulled back a little bit, but I've had a lot of savvy clients emailing me and contacting me and go, hey, is now the right time to be buying the dip? Because there has been a little bit of a dip. And I said,
Exactly.
absolutely. Absolutely. And those smart investors that are investing for the long term, they understand that the price of admission for investing in equity markets is volatility.
Yeah.
That's what we have to wear. But the really savvy and long-term smart investors, they don't log into their account every day. They don't log into it every month or even semi-annually. They might check it once a year and see any opportunities that they missed to rotate money in, and that's it. And they know that they're investing for the next 10 years. Those are the clients or the investors, especially investors, those are the investors which will do really well over the long term because they know that building real wealth takes time.
I had one client, he almost took a gamification approach to it, and I loved his idea. So he doesn't look at the app until the first day of the next quarter. So 1st of January, 1st of April, 1st of July, 1st of October.
Mm.
And the reason he does it is because he's consistently every month putting money into the account. He sort of loses track of how much is in there. And he said, regardless of what the market's done, because I'm contributing to it constantly and reinvesting, 9 times out of 10, it's up. And I get this last
Mm.
little, oh, look at that. It's actually more than I thought. And then he puts the app down
Yep.
and looks at it in the next quarter. And I thought that's a
Yeah.
nice way of looking at it because then it means it's a positive experience. And there's none of that negativity that goes with, oh my God, the market's up, the market's down. Don't look at it daily. That's our job.
No. Yeah. That's exactly right. And we're still here. So
Yeah, exactly.
not
Still got
balding
on my
yet.
head. I've got a bit more grey though, but still got there anyway. So
That's it. That's
right, mate.
it.
Well, I
But
think
yes, I mean,
we wrap it up there. I think people get the message. Take
mm,
action when you become an expat. Don't play Monopoly and just go around and collect 200 and pay tax. Get
yep.
in there, start buying. Was it Pall Mall and Mayfair and all the commentary? Buy something. Show something for your time away. But yeah, it
Yes,
just sort of tickled the fancy when we saw that. It was like, yeah, actually, it's a lot like expats. I thought that's a pretty
it
good.
is. It really is. It's like the game of life, or I suppose Monopoly, when we can go round and round, we don't do anything. We accumulate a bit of savings. Savings doesn't keep up with inflation when over that 10-year period, we really could have built something for ourselves.
Exactly, mate. So, look, thanks very much, mate, for the call as always. Bit of housekeeping. Obviously, I'll see the folks tonight in Abu Dhabi. So by the time this episode is released, it's done. So if you didn't come, you missed a big one. Sucks to be you. But if you did come, good to meet you there. And as I said, ratings, reviews mean the world to us. It doesn't cost anything from your side. We do this for you guys. All we ask for in return is a bit of love on that side. So any ratings
Right,
and reviews you guys can do, we'd really appreciate it.
sounds good. Thanks,
All right, mate.
guys. Thanks, Brett. Speak
Talk to you
soon.
later on. Thanks, mate.